Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press, and today is May 27, 2020. It's actually my dad's birthday. I just realized that. But as I always say, let's get into it right now. So, let's start with the global market report, then we'll talk about the calendar, and then I want to talk about the biggest surprise that I'm seeing in the market right now and how you should play it. So, global stock market turned higher Wednesday as European Union proposed more economic stimulus. I think it was around 700. European markets rose after the EU Commission proposed a new $825 billion or 750 billion euros package of financial aid meant to help the region's economy recover for what is already considered the deepest recession in living memory. Boy, they get very emotional about this. Benchmarks in Shanghai and Hong Kong, however, retreated after the White House said a proposed national security might jeopardize Chinese territory status as a global financial center. And that's very important right now. On Tuesday, Wall Street closed at its highest levels in nearly 3 months on hopes that the global economy might be recovering from its deepest slump since the 30s as more countries reopen factories, shops, so forth and so forth. So, the law under consideration for Hong Kong by Chinese legislature has prompted warnings. It might erode the independence of courts and other elements that may help the former British colony as a business center. Hong Kong leader tried Tuesday to reassure businesses and laws that public threatened civil liberties. Details haven't been released, but the decision to enact the law reflects determination of government to tighten control over Hong Kong's following anti-government protests. That is not good. I mean, we've had more turmoil with China since Trump took office than I remember in the last 30 years. We got the trade war. Trump and China just don't get along real well. Friction has already mounted over the pandemic, which originated in China, and over whether Beijing is delivering on pledges to boost imports from the U.S. as part of a trade deal with Washington. And honestly, I think we really should focus on the fallout from the COVID-19 and deal with this trade war a little bit later. That's just my personal opinion. I don't think we're ready for that yet, but that's what it is. Crude oil has been choppy. It's been losing, gaining, but it's been steady. It's been holding on, and volatility has been low. Let's look at the calendar. Now, today is Wednesday. We had consumer confidence. We had new home sales. None of these numbers are great, but the biggest factor driving Wall Street right now is the overall stock market. We had a huge jump yesterday. We had positive data, and tomorrow we have GDP, durable goods, and jobless claims. I think the markets are going to be a little calmer today. We had about a 700-point jump yesterday. Markets cooled off. We're going to open about 300 points higher. And the interesting thing is this, the S&P 500. Now, it tried yesterday to trade above the 200-day moving average. It couldn't. It failed. It broke through towards the end of the day. Today, pre-open, it's also trying to trade above the 200-day moving average. If we could trade above the 200-day moving average for 2 sessions, meaning we don't touch the mustard-colored line, the low of the price action is completely above the yellow line. If it's not, we're going to have a problem. So I don't consider us trading above the 200-day moving average till the market completely trades above the mustard-colored line, does not touch the colored line. The low of the day does not touch the line. It means we won't hit 300.05. We will trade above that on the SPY. If we do that for 2 days in a row, we're going to see a strong influx of hedge funds moving into the market. Typically, hedge funds look for 2 days either above or below the 200-day moving average to determine if the market is bullish or bearish. That is a strong filter. The filter is usually 2 days above the 200-day moving average, and then when the market trades above the high of those 2 days, that's where you would enter. Again, this is something I've back-tested over the last 40, 50 years several times. You don't want to get in when it's just starting to peak out, because the reason is we've seen many periods where the S&P will just stay around the 200-day moving average and kind of just go above and below and above and below, and that frustrating period can last several weeks. And I don't want you guys just sitting there getting stopped out. I would rather you get in at a better price, but not get stopped out to the downside. So we use this 2-day clearance. It's called 2-day clearance, either above or below the S&P 500. And right now we're talking below. Now look at here. Notice we traded at the line, and then we broke down, and then we broke down, and then we went lower. Notice it stays, it likes to accumulate. It likes to accumulate or gravitate around the 200-day moving average. Let me show you again. You see that? It tends to stick around here for a while. That's the 50-day line, but I think you get the point. The point I'm making is stocks like to stick around the moving averages. They're like magnets. So you always want to wait for a pullback, a strong pullback, either above or below, where none of the trading range is tied or holding the 200-day moving average. And in this case, we're breaking higher. So you want to make sure that the low of the day doesn't hit 300 or, 340. Basically, make sure the low is above this mustard colored line and it doesn't touch it like this, because yesterday the same thing happened. We opened above and then we hiccuped during the day, and then we closed higher anyway, and that was fine. But again, if it touches it during the session, during the day session, during the main trading session, no soup. All right, let's look at the NASDAQ 100, and then I want to take a look at volatility before I turn you loose on the day. I love the NASDAQ 100. I just love how it continues making higher highs. I love it. Look at this. Let's get rid of this bar here. Notice it's making higher, but volatility is holding steady. We're nowhere near the 200-day moving average. And if we look a little further, we're only, look at this, all-time highs like at 237, we're at 233. So I like what I'm seeing on the NASDAQ 100. I like what I'm seeing on the SPY, but I want to give it another day and a half just to make sure. Let's look at the Russell 2000. Russell 2000 is going higher, but it's got a long ways to make up before we hit the 200-day moving average. And I think the NASDAQ, which is leading the market, is slightly overbought right now. This is the RSI, and notice we're hitting 70. And notice price is going higher here, but we're going lower. The highs are getting higher here. Let me show you this. I'll just move this a little bit around. I'll borrow these lines here. Notice we got a higher high. Let me see if I could draw this for you here. I am no artist. Here we go. So notice we got higher highs, and notice we got lower highs. And the RSI is up near 70. That's giving us divergence. That's the same thing that happened right here. Same thing. Lower highs, higher highs. When you have divergence, the market breaks. Usually, these divergence, they're not very steep, and they usually just tell us that the trend is ending. So there's a good chance that the NASDAQ will pull down maybe to the 215 or maybe even to the 200-day moving average, and that's going to pull the NASDAQ, that's going to pull the Russell and the S&P along for the ride, because there's a strong correlation between these stocks. But overall, I'm really liking what I'm seeing. I just think the market's getting a little bit too far, too fast, and it needs to cool off. Finally, before I let you go, let's look at volatility. And volatility continues making lower lows. I actually like to look at line charts with volatility. But notice volatility levels are declining, and we're almost at the 200-day moving average. Here's the thing. When the S&P 500, this sucker right here, fully trades above the 200-day line and stays there, in other words, doesn't hit the lows, that's when you're going to see the volatility trade below the 200-day moving average. And I'm waiting for that to happen, and we should start seeing that over the next few weeks. The markets are continuing to look bullish, but the biggest factor is keep your eye out on that S&P 500 on the SPY. For 2 days, we want to give it clearance. We want to make sure it has 2 days above the S&P, and then funds are going to start accumulating. I'm telling you, 2 days above, completely above, or completely below the S&P 500 is the benchmark that you should be following to determine whether the market is bullish or bearish. Now, I've got something for you. I have just the thing for today's market. Really, just the thing. I've developed a system that works during and after huge market crashes, protecting you on the way down and delivering stocks primed to explode higher during the rebound phase. It doesn't get much better than this. It really doesn't, folks. And today, I've got a brand new stock pick that could earn you $3,680 in just 10 trading sessions. 10 trading sessions. That's 2 weeks. I'd love $3,680 in just 2 weeks. If you can get that consistently, you are killing it. Don't miss out on the next trade. I'm telling you, there's an opportunity here. I've got a feeling it's going to be a good one. Follow the link below or hit the button at the end of this video. Get all the details. You don't want to miss out. You want to get stocks primed to explode higher either before anyone pays attention or in the rebound phase. This will help you do it, especially if the S&P 500 continues what we're seeing right now. It's going to be a nice, strong green ride up. All right, we're going to make some money together. I'm telling you, I could see it. Follow the link below or the button at the end of this video. Get in on this now. It's brand new stock, $3,680 in potential profit in 10 days. Folks, you can't afford to miss this. Get an unfair advantage for yourself and your family. Talk soon.